Good evening, everyone. Welcome to Closing Comments. Today's March 25th, and let's take a look and see what happened today. First up on the board, we got the June 25 live cattle. Today we saw a little break of that 202.30 level we previously discussed. That was our bear pivot for the week, as well as Friday's low. We saw an early flush down about $2, a little bit more early in the day. Price did recover and close back above it on the day, so that was a good sign that the bulls are still alive and well here. Didn't quite reach down to that 20-day average down here at 98.5. Still could have a little bit of downside here. We need to take out today's high. We need to get back above that 203.37, 203.45 area. If the bulls can reclaim that area, then we might be able to get this thing to keep drifting higher. But in the meantime, this thing just still looks a little heavy. I think test of the 20 would be healthy for this market, and a little bit deeper pullback here rather than just a 2-day slide and recovery would probably be good for a more sustainable next leg out of here. So could be just continue back on with some upside from here. This market has proven its strength, but I still don't believe we're out of the woods yet. But today's high is going to be the decision maker for us going forward the rest of the week. So be ready to see above that upside, and anywhere below that I would expect prices to keep pushing down into these averages. So just gonna have to wait and see what the early morning session brings for us tomorrow. Same story here on the feeders. We did see that quick breakdown. Price got almost to the 20-day average. We came up just short of it. 280.40 on that, and the low today was 280.70. We could, same story as the live cattle, could see continued downside and push into these levels, the 20-day average, and then this prior high over here at 277 are both areas we want to be on the lookout for support to step in if we get it. However, if we're able to get back above 285.45, today's high, we expect this market just to keep drifting higher as this market is remains strong. So be on the lookout for the rest of the week using that as our line in the sand. So just going to be playing around this bear pivot. Next up, we've got corn. This May contract lost a little ground here today, getting below our bear pivot at 462 for the week. Wasn't able to get below 456 yet. This is going to be our key level. If we get below that tomorrow, this should bring in a good wave of selling and push this market lower. However, dating back to last week, this 456 was a pretty good supportive level. If we look on our lower time frame, we continue to see downside pressure on it with a lot of these equal lows hanging out right around 456. That's a lot of weight on this level, and if the bears can get offers below that, expect that thing to flush and continue to the downside. So that's the area to be watching for this corn market right now. Anything above that, I would expect to continue trading in this 20-cent range, 15-20 cent range as it goes sideways, but would expect the bears to break this level and continue to the downside tomorrow. Next up, we've got crude oil. Crude oil kind of put in a balanced day, tested the 50-day average. This high came up just shy of it. We saw this market kind of balance out here with price staying supported above our bull pivot for the week. Wouldn't be surprised to see this thing continue dancing around in this area, maybe get a test of 70 or a little bit into it, kind of test some of these prior lows. However, I think the bears are going to be putting up a fight around this area and wait for some of these prior day lows to break down, and we'll see another leg lower back down into these mid-60s. Equity markets had a pretty quiet day, pretty small range considering what we've seen over the past 4 or 5 weeks here. The S&P pushed a little bit higher, closing above yesterday's low, but just kind of hanging out right here at some of these prior lows dating back to November, December, and January. This area is going to prove to be resistance with the 50-day average coming in right here as well. I'd look for, if you're long from any of these lows, I would look to tighten up the risk on my position here as it's pushing up here into this resistance. We could see a little breakdown if the bears are able to take down some of these lows. Good news for the bulls and potential long-term uptrend is we have recovered this 200-day average, as well as seeing that follow-through day over the last day or two here. This is a good sign showing this market is trying to recover. However, we've just got some resistance, so I'd expect maybe a little flush or just continued sideways action here. For me to flip my bias completely to the bullish side, I'm gonna have to see a close back above 58.75 to 5900 here and reclaim that 50-day average. If we're able to do that, we could see prices start to recover and a new uptrend to come from here. Nasdaq also closing above the 200 and pushing into our averages. As we can see, there is some of these prior lows that still need to be tested, so definitely have some resistance that we're going to have to fight through, but we are seeing early signs of a potential recovery here. So still encourage everyone to be defensive. There are some sectors that are holding up nicely and some stocks beneath the surface that are setting up and holding some key levels. So this market is recovering from this 10 to 15% dip we've seen, but just we have some more work to do before we can get comfortable on the long side. So that's all we got for today. Everyone have a good evening. Thanks.